Very good afternoon, everyone. How are you all? Now, last class we started employee stock option plan. We have done only concept and one example based on that concept. Any doubt? Any question? Any conceptual doubt? No. So let us write down whatever we have understood. Correct? Whatever we have understood, let us write down. Write down. We are discussing what? Accounting treatment. Write down. Accounting treatment for equity settled equity settled employee employee share based payment. Employee share based payment. Correct? Got it? Means we are discussing about ESOP, employee stock option plan. Point number one, on on grant day. On grant day, what journal entry will do? So write down no journal entry. No journal entry. Okay? Simple. Point number two. Then we'll pass journal entry during vesting period. During vesting period. Write down point number two. During vesting period. Correct? Write down in this point number A, for recognition of employee benefit expense, means we need to recognize expense. Correct now? Understood? At the end of each accounting period. At the end of each accounting period. So for the recognition of employee benefit expense at the end of each accounting period. At the end of each accounting period. During vesting period, we are discussing about during vesting period at the end of each accounting period. Correct? What journal entry will do? Employee compensation account debit to what? We can add on employee stock option, outstanding account, or you can say simply stock option outstanding account. Both are correct because we are dealing with employee in this chapter. They have a better right employee stock option outstanding account, but you can write down stock option outstanding account also. That is not incorrect. Okay. Understood? Then of course at the end this employee compensation account will be closed by transfer to PL account. Write down. For transferring expense to PL account, for transferring expense to PL account, what journal entry you'll do? Profit and loss account debit to employee compensation account. Got it? Simple. It's write down some notes. Note number one. So I hope you have understood stock option outstanding account. Now one question arises. This stock option outstanding is liability or it is equity? Now when I say equity, equity include capital as well as reserve and surplus. Correct? So when I say equity, so equity means what? Capital plus reserve and surplus. So in balance sheet we write down first equity and then we write down liability. Under liability it can be current or non-current liability. The format already you know. So I'm not discussing about format. The point is that this stock option outstanding account is a liability or it should be shown under equity. What do you think? Liability or equity? Liability or equity? This is my question. He is saying equity. It's a liability. Correct? Now just try to understand. Liability means what? What is the meaning of liability? You have done AS29? AS29? Acha, we'll do. Sorry, I was thinking AS29 is group 1. But AS29 should be in group 1. Correct now? So you have not done AS29. But have you done the meaning of liability somewhere in accounting? Where you have done? In foundation you have done. But I know what you have done. Whatever you have done, that is not a correct meaning. Correct now? Now, in accounting group 1, there was one chapter, framework for the preparation and presentation of financial statement. In that the definition of liability is given. So have you done the definition of liability there or you forgotten the chapter? Framework chapter you have done? You have not done only. How many of you done? Huh? Chodo. So what is the meaning of liability? Liability means a present obligation arising from past event which will be settled through outflow of resource, means which will require settlement through outflow of resource. Outflow resource means there must be some outflow of resource. Resource means cash or any other asset. But in this, when I am saying stock option outstanding account, there is no outflow of resource. It will be converted into equity shares. It will be converted into equity share without any outflow of resource. For example, if I say debenture issued. So of course, when you receive some amount for debenture, for issue of debenture, so there is an obligation to pay in future. So when there is an obligation to pay in future, there is an outflow of resource. So debenture is a liability. But when I say equity share capital, the equity share capital, once it is issued, we have received the consideration, but there is no obligation to pay in future. There is no obligation to pay in future now. Whether there is any obligation to pay in future, there is no obligation to pay in future. Therefore, equity share capital is not a liability, it is a equity. It is a equity. Similarly here, if you apply the definition of liability in stock option outstanding account, so the services has been received, means consideration can be received either in the form of cash or in the form of asset or in the form of services. So we have received consideration in the form of services, but there is any obligation to pay? There is no obligation to pay. There is no outflow of resource. Therefore, it is equity, and therefore stock option outstanding account will be shown under the head reserve and surplus. Understood? Correct? I think this question normally this question is asked. Is stock option outstanding account will be shown under the head equity or reserve? Sorry, liability. It will be shown under equity as reserve and surplus. Right on. Stock option outstanding account is equity. Understood why I'm writing equity? And will be shown under which head? Under reserve and surplus. Got it? In balance sheet. This point you have understood. Then point number 2, write down. Write down. Calculation of value of option, value of option, value of option to be recognized, to be recognized what? As an expense, as an expense during what? Vesting period. During vesting period. So how to calculate? One question already we have done. I have already informed you how to calculate. That I am just giving rating. So first we'll try to calculate cumulative value of option, cumulative value of option to be recognized as an expense to be recognized as an expense, correct, till expired period. Understood? Till expired period. Till expired period means suppose out of 3 year 2 year has been expired, so first we'll calculate only for 2 years, correct. So this will be the amount. From this we'll deduct what? Less expense already recognized in prior years, already recognized in prior years. So if you remember the last example we have done in 4 column. So third column was cumulative and the fourth column was expense of that year. So fourth column expense we have calculated by deducting expense of previous year. Remember, same thing I have written. I hope you have understood. So this balance amount will be the expense of current accounting period, of current accounting period. Have you understood this point? Below. Any doubt? Correct. Now how to calculate cumulative value? Write down point number 3. Cumulative value of option to be recognized as an expense till expired period. This we should know how to calculate. It means what? First we'll calculate total fair value of option, total fair value of option, you know, total fair value of options multiplied by what? Can you say multiplied by expired period? Multiplied by expired period divided by what? Total vesting period. Total vesting period. This only we have done. You can see for 1 year we have done 1 by 3. For 2 years we have done 2 by 3. For 3 years we have done 3 by 3. Like this same thing I am saying. I hope you are understanding whatever I am writing now. Total vesting period. Now how to calculate total fair value of option? Total, sorry, don't write down FB, my mistake. Total value write down. Total value of option write down. Total value of option is equal to what? Will be what? Number of options. Number of options expected. Number of option expected to vest on vesting day. We need to estimate now. The number of option expected to vest on vesting day. For the last year, we'll take actual only. That is understood. So I am writing expected. The first year we have done some estimation, second year we have done some estimation, third year it was actual only. Correct. The number of option expected to be vest on which day? On vesting day multiplied by what? The value of options. Value of options. Understood. Now how to calculate number of option expected to vest? Write down. Number of options expected to be vested on vesting day is equal to what? How to calculate number of options? The number of options, to calculate the number of options, we need to find out number of employee who will actually perform the condition. Correct now. So number of employee, we need to find out number of employee expected to what? Perform the conditions multiplied by what? Options per employee. Options per employee granted. The last question, if you say 500 employee was there and each employee were getting 100 options, so we have multiplied with 100 in each case. So we first calculated number of employee expected to perform the condition based on the information given in the question. Understood? Correct? I think we are just writing in reverse way. Understood? Now only one thing, I need to just explain value of options now. So write down. Next point, point number 6. Correct. Now value of option will be either fair value of option or intrinsic value of options. Right now we have discussed only about intrinsic value of option. Correct. Now 2-3 attempt before, ICI used to ask only question based on intrinsic value. But now in the recent ICI study material as well as in RTP, we have seen that they have started giving questions based on fair value of option also. Correct? Understood now? So the same chapter we have in CA final also. So in CA final we do detailed discussion about fair value of option. Considering the syllabus of CA Inter, we don't used to discuss a fair value of option 2-3 attempt before. But now because institute has started asking question on fair value options, it is our duty to inform you about fair value of options. Correct now? So initially I have not discussed. Initially we have done question based on intrinsic value of option. But now write down. Write down. Value of option. Write down. Value of options can be either point number one, fair value of options, fair value of options, or point number two, intrinsic value of options. Means now from examination point of view, if fair value of option is not given, then we'll use intrinsic value of options. However, already I have said that accounting treatment of ESOP is covered under guidance note, and guidance note has given two options to the entity. Either they can use fair value method or intrinsic value method. These two options has been given to the entity. Either they can adopt fair value method or intrinsic value method. However, from examination point of view, if they have given fair value, it means we need to use fair value only. But if they have not given fair value, then we need to find out intrinsic value by our own, and we need to apply intrinsic value. So from examination point of view, can I say first preference should be given to this? Means if both are given, the first preference should be given to what? Fair value. And if fair value is not known from examination point of view, then we'll not calculate fair value of option, then we'll calculate what? Intrinsic value of option. Correct? The second preference will be given to what? Intrinsic value of option from examination point of view. I hope you are understanding the emotions. Second preference will be given to what? Intrinsic value. Can I say from my point of view, you have understood intrinsic value of option. We have not yet discussed fair value of option. So give me some time. We'll discuss about fair value of options also. So till the time being, I discuss fair value option, fair value of option. Don't think about fair value right now. Okay? So write down point number 7. Intrinsic value of option. Intrinsic value of option will be used when what? Fair value of option is not given in question. 70% chance is that they will not give fair value of option. But now there is a high chance that they may, not high chance, but now there is a chance that they may give fair value of options also. Okay? Only the thing is that now instead of intrinsic value, you should write down fair value. The entire calculation remains same. Whatever we have done in the last question, we have used intrinsic value. If suppose fair value is given, so instead of intrinsic value, we'll put what? Fair value. Calculation will change only, but accounting treatment remain same. Got it? Are you able to understand what I am saying? Yes, sir. So how to calculate intrinsic value of option? So write down intrinsic value of options. But we calculate intrinsic value of option on which date? We calculate on which date? On grant day. On grant date. So how to calculate? We'll find out market price of what? Market price of what? Market price of what? Market price of what? Shares. On which date? On grant day. Correct na? Market price of shares, intrinsic value of option. Options and shares are different. Shares, option. So we are finding value of option on the basis of value of shares. So value of shares, market price of shares minus what? Minus exercise price. Minus exercise price. Got it? Have you understood this point? Head up. Subsequent changes in market price of shares. Subsequent changes in market price of shares. Subsequent changes in market price of shares. Can it subsequently market price will change? Will definitely change, na? Market price may change every day. Now one doubt will come, sir, if market price will change subsequently, so intrinsic value will change. So should we do reassessment of intrinsic value? Should we do reassessment of intrinsic value? Understood what I am saying? Not understood. Not understood. Let me draw. Correct now. Means I am saying this way. This is what year 1, year 2, year 3. Here the market price was how much? In our example, 120 na? And exercise price was how much? 30. So in our previous example, intrinsic value was 90. And we have taken this intrinsic value for calculation of expenses. So last class you have not asked any question to me about subsequent changes in the market price. Why you have not asked? Because I have not informed you. Because you think that much only whatever teacher will say. Are correct na? But can I say you should think by your own? Because you are which student? CA student. You should develop this skill. Correct? In final, once you come to CA final, this skill should be developed by your own ability. I will help you to develop, nothing to worry. I will change you. At the end, means once our batch will complete now, means when the 30% class will be left, you will ask me a lot of questions. Because at that point of time you will be totally changed. I mean initially I am changing you. Okay na? But can I say valid question or not? Valid question or not? You should think or not? Means whatever I am teaching, you should not accept till you understand. Correct? The best quality of CA is what? CA should be suspicious. Understood? You have done audit? Not, you audit not started. But as an auditor, we should be suspicious. We should ask always question. Why this? Why this? Why this? Why this? Correct? Yes, sir. So let us now ask the question, sir. Now you asking to me, sir, if sir market price become here 150, then sir market price can change यहाँ पर also. Market price can change यहाँ पर also. And on exercise day, market price may become 400. So this company is allotting shares on which date? Company is allotting shares on grant day or exercise day. So can I say here exercise price remains same? Exercise price remain. So actually the expense become how much? 380. Expense become 380. So expense is 380 and you are recognizing an expense of 90. Can I say this is wrong, sir? I am asking, means I am asking on your behalf. Means you should ask this question to me. Bole yes or no? Are bolna rahi? Now I'll give answer for this. Nothing to worry. Now it is my turn. I will give answer. I hope your question is totally valid. Totally valid. So what I was going to write means before this explanation I was giving some sentence na. Let us complete that. The subsequent changes in market price of shares is not relevant. Is not relevant for calculation of expense. Understood? Is not relevant for calculation of expense. Means can I say if subsequent market price is given, so we should totally ignore it. We should totally ignore it. Understood? And we should not consider it, and we should book our expense based on market price on which date? Grant date. Understood? Understood? What you understood? Whether you have understood why we are not considering this? Huh? You have not understood because I have not done any explanation. Whether I have explained, I am just given a statement. Just try to understand what I have written. What I have written, subsequent changes in market price of shares is not relevant for calculation of expense. This statement you have understood. But whether logic behind this that you have understood. So why you have said understood? I said understood. Yes sir. You said yes sir understood. What you have understood? Nothing na. Change. Otherwise ICI will change you. Change. Otherwise who will change you? Definitely ICI will change you. Correct na? Understood now? Because ICI always filter the student. They will take best among good. I'm not saying you are not good. You are good. But CA will be the best among good. Understood? So they do always filtration. First foundation is filtered. I think many of your friends who joined CA course with you in CA foundation already filtered. You know many of your friends na? They just try to understand what I am saying. You may have taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. How many attempts for foundation? But you pass foundation na? You pass foundation means you are potential to become CA now as per ICI. But there are many students who have not cleared what CA foundation means. They do not have potential to become CA. They have filtered. So you came to CA inter, so you become good student. Now among good, who will become CA? The best. So I am saying change, otherwise ICI will change you. This is perfect for CA student. Now, what I have said, subsequent changes in market price sales is not relevant for calculation of expense. This statement you have understood, but logic behind this you have not understood. It means you need to ask me, so why? So I will answer. Even though you are not asking why, I will answer. Nothing to worry. But I will be happy if you are asking that doubt to me. Means one principle in life till you become CA. Means this principle should remain with you after becoming CA also. Means for example, if you consider myself till I understand, I do not leave that topic. I will keep on reading till I understand the topic. Correct now. So same thing with you. Till you understand, you will keep asking the question to your faculty, sir, please, what maximum what will happen? I will scold you. I will say go out of the class. Maximum na. Maximum na. अरे बोलना रे. Okay. But you should ask question till you understand. Then once again come back. Sir, please explain na. Understood? You should not not leave your faculty till he explain. Till he explain. Correct? Chalo. Now, everyone just try to understand. Let us come to one practical example. You will understand this point. Correct? I will ask one question to you. Everyone, what is the journal entry of issue of equity shares? What is journal entry of issue of equity shares? Bank account debit to equity share capital. And normally can I say equity share capital will be issued at market price only? Current market price? Means issue price will be normally current market price. So suppose nominal value is equal to 10, and let us assume for simplicity market price is also 10 for simplicity. So can I say this become 10? Can I say equity? So equity share capital is equity. Now subsequently, everyone just try to understand whatever I am saying. Subsequently, this 10 may become 20, may become 25, may become 50. My question to you all, what journal entry entity will pass? Entity means company, not shareholders. I am not asking about shareholders. What journal entry means what adjustment will be done by the company after issue of shares for the subsequent change in market price? No entry. Why no entry? Value to increase. अरे 10 rupees become 20 na? Value be increase or not? So why no entry? No, no, raise your hand. I am not able to understand who is answering. Who want to answer? Arey answer. Now no one is answering. Means always we are happy to say in what crowd, so that no can. No, 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 no. 10 rupees become 20 today. Huh? Then just try to understand. Right now, I am not discussing about realization, etc. I think you have done asset, property, plant, and equipment. There also you recognize revaluation surplus. So we can put in any reserve. We do not revaluation of asset. We increase the value of asset or not, even though not realized, but we accumulate a profit under one special account revaluation surplus or reserve. So that also we can do here. Understood now? So I think for us understanding is required. Okay, nothing. I'm happy that you have replied. Okay, very, very. You should be always participate. You may be correct, you may be wrong. Always in a game, one is winner, one is not winner. There is no loser. When you participate, you are always a participate. You participated. That is only a very good point. Now you are saying something. No, 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 no. In last class only I said nominal value is bakwas concept. I am asking you practically. I can say nominal value is this and issued at 20. Then premium will come now. Securities premium what? 10. But can I say we are recognizing 10 or not? So my question is that 20 now become 25. What about 5? It's simple. Just try to understand everyone. Just try to understand. This is what a share certificate. I am company. This share certificate has been issued to whom? Lila? To the shareholders. I am the entity. I have received consideration. Correct? Now, market price increases. Who become happy? Entity or shareholders? Shareholders. It is a gain of what? Shareholders. It is a loss of what? Shareholders. What company will do nothing? Means can I say the increase or decrease, the gain or loss is exposed by whom? Shareholders. So he will pass the journal entry. Na? Can I say entity is not exposed to any gain or loss? Entity is not exposed to any gain or loss, therefore equity is never remeasured. Asset will be remeasured, liability will be remeasured, but equity will remain same. We never do subsequent measurement of equity once it is recognized, and we never do the remeasurement of equity. This is general rule. Have you understood the rule? Have you understood? Same thing I have said, but just try to understand. This stock option outstanding account is equity or liability? Equity. And equity you have recognized at 90 on this date. Any subsequent means if the market price increases, who will be happy? Employee will become happy now because they need to pay rupees only 30 and they will enjoy. And if suppose a market price become 10 rupees, then they will be in the loss now. Entity want only service. Service receive, thank you very much. Correct now. Means can I say any increase, any subsequent changes in the market price, so with that increase or decrease, entity has nothing to do. And therefore, for this accounting treatment, subsequent changes in market price is not at all relevant. Understood? Can you say now this statement is correct? Now this statement is correct. Subsequent changes in market price of shares is not relevant for calculation of expense. Till now, I think as per my understanding, till now, they have not asked this type of question. They have given only market price on grant day. But believe me, the day means in exam, if they have given market price on each day, now every student will do mistake who don't know this concept. Means the student who are doing rectification with little change in the question, they will die. Means suppose I have not explained this point because institute till now has not asked this type of question. But suppose they have given market price on exercise, then you will be confused in exam and you will take wrong intrinsic value. You will take wrong intrinsic value. So now this is very important point for this topic. So what is that point? The subsequent changes in market price is not at all relevant for this chapter. Ignore if given. Ignore if given. Correct. Any doubt is coming in your mind after my explanation? Doubt should come. Doubt is coming means you are trying to understand. If doubt is not coming means okay. Well, what? What example? This example that I've drawn. Arre, will do re problem. You can add on this kata 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 kata. I will do re. Service आया ना. I said just try to understand one rule because he has asked this question. Therefore, I'm explaining. There was no intention to explain, but I'm forced to explain now. When just try to understand, as an entity, you can receive cash, you can receive asset, you can receive services also. Correct? Everyone just. If I receive cash and there is an obligation to pay, it is liability. Debenture. Debenture. If we receive services and there is an obligation to pay, it is also liability. Salary outstanding, salary payable, it is liability. If we receive asset and there is an obligation to pay, it is also liability. Property, plant and equipment purchase, plant and machinery purchase, obligation to pay. It can be from the point of equity also. We receive cash or we receive asset or we receive services, but there is no obligation to pay. It is equity. It is equity, na? Simply here employee has rendered services, but there is an obligation to allot equity shares. There is no obligation to pay in cash. Therefore, it is equity. Means nothing is going out. You have received. Now you are issuing equity shares. Simple. But there is no outflow of resource. There is no outflow of resource. Are you getting? You are only issuing share certificate, na? So there is no outflow of resource. So this is equity. So you can receive cash. You can receive services. You can receive asset. If there is no obligation to pay in cash or in the form of asset, it is equity. So stock option outstanding account, you have received what? Services. Understood? Correct? And doubt. But a doubt will come not in inter. At final stage, once you become thoda sa more matured, so one doubt will may come. Normally in final stage also, when I teach this, because I said the same chapter I'll do in CA final if you come to me. If you come to me for CA final FR. Correct? But I found that this chapter, when I teach in CA final, actually this point is also not known to anyone. Means 90% student do rectification. CA inter can be passed with rectification, but CA final cannot be passed with rectification. Correct now? CA inter can be passed, but CA final you will die. Correct? Now one doubt will come. Intrinsic value you have understood. But one doubt will come, one doubt may come. Sir, actually shares are issued यहाँ पर ना. So some way we are doing wrong. Understood now? We should take this intrinsic value. But this doubt should come or not. Means whatever I am explaining, you should not accept. If you have doubt, you should ask me. Every doubt will count. Every doubt. Now my question to you all, how many of you were having this doubt? Means that doubt came but you have not asked. No one have this doubt? Chalo, I have created doubt. But this doubt is now coming or not? Everyone, what I said? Sir, actually shares will be issued on exercise date and that is known to everyone. Means actually this market price is not at all relevant. Because employee also know and company also know his shares will be issued on this date. Correct now. Means I'm just taking one example. Just try to understand. Suppose I am in Reliance Industry. Now everyone know Reliance Industry is a very big company. And right now the market price of Reliance Industry is 2000. Somewhere around 2200 as a picture. Correct. Now I have given option to my employee that you can purchase the shares after 3 years or 4 years as the case may be at rupees 2000 only. But you will accept or not? Why? Because you know after 4 years it will be 5000. Understood now? So exercise price is how much? 2000. So value becomes 0. Whether value of right can be 0. If it is 0, then to no use only. If the value is 0, then no one will perform any condition. Means technically it is wrong. Technically it is wrong. Technically. Means in the last class you said, you only said, I was saying that I was saying that option is a right to subscribe shares at a price, at a price. I was writing something, then you stopped me, sir, lower the market price. Bolo. You said me na. So I said, okay, I will explain somewhere. Baad mein. So can I say, it means ESOP can be issued at market price also. Means it might happen here exercise price can be equal to market price because Reliance Industry say, here I'll give you my shares after 4 years at current market price. Everyone will accept because we know that after 4 years it will become 5000. अरे बाबा Reliance Industry पूरा economic condition of India is dependent on Reliance Industry and you are asking about Reliance Industry it will become 1000 then to it will become Sri Lanka. अरे इतना भी you should not think so much negative about that company ना. हाँ Mukku died. Mukku you know Mukesh Ambani. अरे actually I am also the owner of Reliance Industry Limited. You know I am also the owner. I have some shares. So Mukku is my colleague only. He always asks me to come in AGM, but I said I am busy. I will not come. You only manage. So I always write a letter to Mukku bhai that you manage. You are doing good. Correct now. But just try to understand what I am saying. A good company, the price will increase or not. And during the passage of time, just try to understand. A good company, at short period of time, it can be up and down. But during passage of time, that up and down will be like this. Understood now? I think you are dealing in stock market. You are dealing. Therefore, you have asked me this question because he might have some knowledge. For example, COVID-19 happened. What happened? All the price shares fall down. But once it recovered, the price increased like this. So in short term, it can be like this. But dire, good company will be like this. Understood? You can see it is increasing now. So I said after 4 years. I'm not saying after 1 month. After 1 month, it can decrease. But during the passage of time, it will increase only. A good company, I am saying, provided everything is good. Provided everything is good. Mukku is alive. Mukku is good. Because I know their sons are correct. Chodna. What I am saying, just try to understand. Just come to the concept right now. If Reliance Industry will say that I offer you some shares after 3 years or 4 years, that you can purchase the shares at rupees 2000 and the market price will be 2000 provided you perform some condition, will you accept or not? Yes, because you know it will become 5000. Now one doubt will come, sir, value of right cannot be 0. If value of right is 0, then no one will perform the condition. Are you able to understand what I am saying? No one will perform the condition. If the value of right is 0, will you be motivated? You will be demotivated. Means even though this intrinsic value of 0, but it has some fair value. And therefore there is a concept of fair value of options. Have you understood? Have you understood this point? No, I am coming to that. How to I will say. Have you understood this much? What I am explaining this much. I said थोड़ा final में चलेगा ना. When I am into final, I will not ask you any question. I said recently they started giving question of fair value of option. Believe me, I was also not teaching fair value of option in inter class because I know it is not a concept of CA inter. It is a concept of CA final. But they are asking, so I should now inform you now. Are you getting what I am saying? Intrinsic value understood, but now I have informed you that even though intrinsic value understood, but if you calculate intrinsic value, in this case it will become 0. And the value of option is 0, then no one will perform only. Therefore, intrinsic value is technically not correct, and therefore guidance note has given the concept of fair value, and first preference should be given to fair value of option. Fair value of option. So what is the fair value of option? So what guidance note says that you need to find out fair value of option on which date? Grant day. Fair value of option on grant day. Correct. Understood? Have you understood this point? So how to calculate fair value of option? You need to estimate the market price on exercise day. Means on grant day, you need to estimate what can be the market price of shares on grant day. Exercise day. Suppose you estimated 5,000. This is expected market price. Correct. And exercise price is known is 2,000. So can you say this become expected intrinsic value? This is expected intrinsic value on which day? On exercise day. Correct. Understood. But you need to calculate fair value of option on which day? Grant day. Do you know the concept of time value of money? Where you have done? In foundation you have done. In FM not started till now. In FM you'll have a very good understanding of time value of money, because entire FM is based on time value of money. So I think recently you started FM, so you might not be knowing exact calculation of time value of money, but you have done in mathematics in your foundation level. You have done compounding, you have done discounting also. Compounding reverse is discounting. Correct. Means as per time value of money, this 3,000 we can find out the value as on this day. This is known as present value of what? Future value. How to calculate? We'll leave it right now. Means one thing what I am saying, if you know future value, you can calculate current value or not by using the concept of time value of money. Don't worry, in accounting exam they will not ask you to calculate fair value option, they will give you fair value of option, and this value will become fair value of option on grant day. Have you understood the concept? What I am saying, fair value option is more superior than intrinsic value of option, and therefore first preference should be given to fair value of option. If fair value of option is not given in exam, then we'll use intrinsic value of option. It means now this point you have understood. I have explained from examination point of view. Now I will not go beyond that, because whatever now I will say, it will be very high level. I just want to explain this point. Have you understood this point number 6? Have you understood this point number 6? Key value of option can be either fair value of option or intrinsic value of option. First preference should be given to fair value. This logic you understand why we are giving more importance to fair value. If fair value of option is not given in question, then we'll use how to calculate intrinsic value of option on grant date. Consider market price of shares on minus exercise price. Subsequent changes in market price is not relevant for this chapter. Understood? Understood. Now done. So we have done point number 1. What was point number 1? Check करेंगे. On grant day. Then we have done point number 2, during vesting period. Now come to what? Point number 3. During which period? During vesting period. Done na? During which period? बताओ? Exercise period. So point number 3 write down. During exercise period. Point number A. On exercise day, means for on exercise day, upon exercising of of options by whom? So in this, write down point number 1. First what? For receipt of exercise money. What journal entry? Bank account debit to what? Mhm. First you will accumulate in which account? It is just like share application account. You have done an application. First we accumulate all amount received in application account. Then we transfer it to capital account. Correct now? So stock option outstanding account. Then point number 2, for allotment of equity shares. What journal entry? Stock option outstanding account debit to equity share capital and to securities premium. Can you say stock option outstanding account in this case will be equal to what? Mhm. See the, can we say value of option plus exercise price? Amortized value not. Value of option. Value of option can be intrinsic value or fair value. So I am writing intrinsic value chalega or writing better write of value. Value of option plus what? Exercise price. Equity share capital with what value? Nominal value. And this will be balancing figure. Correct. Can I say alternatively, following compound entry can be recorded? In exam we'll do compound journal entry. बताओ, what journal entry? Bank account debit with what? Exercise price. Then stock option outstanding account debit with what? Value of option to what? Equity share capital to securities premium. This is nominal value and this is balancing figure. Means simple, but can I say premium is equal to EP plus value minus nominal value? So always keep in mind premium can be calculated in this way. Exercise price plus value of option minus nominal value. Got it. This also you have understood. Correct. Then add down what point I have given. This was point number 3 ka point number A. Then add on point number B. On cancellation of what? Vested option. Vested option na. On cancellation of vested option at the end of exercise period. So automatically it will be cancelled at the end of exercise period. What journal entry? Stock option outstanding account debit to what? General reserve. Correct? Done. All the journal entry we have done. Any doubt? Simple. Write down one note. There will be no separate journal entry for cancellation of what? Hmm? Cancellation of what? Huh. We have done separate journal entry for vested option now. For cancellation of what? Unvested options. Have you understood this sentence? For cancellation of unvested option, we are not doing any separate journal entry. But for cancellation of vested options, we are doing separate journal entry. Why? Can you explain me? Have you understood this sentence? No. First, have you understood this sentence? Everyone understood this sentence? English you have understood. Logic have you understood? Huh? Bata. Hmm? We have realized expense of vested option. Huh. Correct. Can you say when we are into vesting period, so we are doing reassessment of expense for cancellation of unvested options only? Means at the end of vesting period, we have recognized expense only for vested options. Means we are not recognizing any expense for cancelled unvested option. Therefore, reversal is not required. But we have already recognized the expense for vested option. For their cancellation, some journal entry is required. Understood? Have you understood this point? Point number 2. Write down. During exercise period, if market price of shares fall below what? Fall below exercise price. Quite possible. So if the market price of shares fall below exercise price, what employee will do? Employee will not exercise. Means entire options will be cancelled. Correct now. Automatically they will not exercise now because they can purchase from the market. They will purchase from the market. So during exercise period. Better write down exercise period. If market price of shares fall below exercise price, employee will not exercise their option. Understood? Correct. All the point done. Now we can take any questions. Now only we need to do take questions, understand from examination point of view. Concept over. Any doubt? Can we take some questions? Yeah. Question. Let us take some questions. Simple will start. We'll increase the level of question slowly. Chalo. Question number 1. X Limited offered 15,000 ESOP to its employee on 1st April 2001. Correct? Means 1st April is granted. Exercisable on 31st March 2004. Means it can be exercised on 31st March 2004. On 1st Jan 2002, 1000 options were withdrawn from employee. So it means it is cancelled. Correct now. On 31st March 2003, 2000 options were cancelled due to resignation of employee. Okay. Rest of the options were availed by the employee on due date. Market price on 1/4/2001 means on grant date for equity shares of company is 40. Face value is equal to 10. Face value and fair value are different. Huh? It is face value means nominal value. However, market price on 31st March 2004 is 80 per share, generalized entry. Have you understood the question? Let us understand. Correct? You will help me. We are doing question number 1. What is grant date? 1/4/2001. How many option granted? Whatever I am writing, you should also write down. Whenever question is given date wise, now better you draw. Once you draw, now it become more clear. In para, sometimes we are confused with the date. Better you write down, it will become more easy. You are saving time, you are not wasting time. By drawing the timetable, you are actually saving your time for answering. And if you are not drawing, so you will take much time in answering. So it is not wastage of time, it is saving of time. Okay? Array, scale is not required. Array. Scale is not required. Huh? Scale is not required. Huh? Draw with your head. Then what is the market price on this date? What is the exercise price on this date? Huh? What is the acha, sorry, I forgot. Now what is the exercise price on this date? Exercise price? Because offered 15,000 ESOP to his employee, itna, but they have not given what? So whenever exercise price is not given, what you will assume? Hat nalayak. Face value is mahabakwas value. What? Try to understand my emotions now. Face value, face value, why face value? If exercise price not given, what is the best assumption you will take? From the emotions of this chapter, batao, it should be equal to, I am giving you two options, whether it should be equal to market price or whether it should be zero. So I am asked, I have given two options, he is giving third option. Matlab, what is this, Baba? I am giving two options. Out of these two options, you have to choose one. Whether it should be equal to market price or it should be equal to zero. Zero only now because you are thinking from employee's point of view. It can be also equal to market price. Already I have said. But from the emotions of this chapter, it should be lower than what he is saying, lower than. So best answer should be what? Zero. So whenever nothing is given, we'll assume it is means exercise price is what? Zero. This is the best assumption. Best assumption. If question is silent, you can also assume what it is equal to market price, but that is not best assumption. I will not give marks for that assumption. Write down in writing, so you are expert. लिख लेंगे रे. Correct ना? But what is the intrinsic value? What is the intrinsic value? 40. Whether fair value of option given. So we'll use what? Intrinsic value. Then they have given 31st March 2002, 31st March 2003, and it is exercisable on 31st March 2004. They have given market price as on this date. How much given? Whether this is relevant, any subsequent change in market price, whether it will be considered. Understood? Your example done? You ask me, na sir, give some example. So कांटा लगा, कांटा लगा दे. बकवास information should not be taken into consideration. कांटा लगा. Correct? Then they have said some point. What they have said, check करेंगे. 1000 options were withdrawn on 1st Jan 2002. तो चलो 1st Jan 2002. तो okay, 1st Jan will come somewhere यहाँ पर. On this date, how many options were cancelled? 1000 options were cancelled, withdrawn. Correct. Then they have given some more point. On 31st March 2003, 2000 options were cancelled. So on 31st March 2003 means this date, 2000 options were cancelled. This is actual cancellation they have given. Actual cancellation. Okay. Correct. Then they have given market price. We have done face value. Okay. 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 Everything we have done. They have given nominal value. Write on nominal value. Nominal value is equal to 10. Always write on NB. When you write on FB, I think you will be confused with face value and fair value. So for face value, always I will say nominal value in this chapter. Because when if I am writing FB, you will think it is fair value. So fair value, dangerous, huh? Got it? What do you think? Very simple. Now, everyone, we should calculate expense at the end of each year. At the end of each year, now. Now, whenever they have not given vesting day, because it is given, it will be exercised on 31st March 2004. Whenever they have not given vesting day, we will assume vesting day and exercise they are same. It means, can you say this is the vesting period and vesting day is only exercise day? Correct? Understood now? Have you understood this point? It means we need to recognize expense for how many year? How many year? 3 year. But for this year, how many options you will take for the first year? For the first year, how many options you will take? 15,000 minus 1,000. Do you know about this information? Whether any expectation has been given? No. So you can't assume expectation by your own. Correct? It means for this, how many options given? 14,000. What is the value of options? What is the value of options? 40. Correct? Understood? But the second year, how many options you will take? 14 minus 2. 14 minus 2 na? 2 1 second withdrawn. It become 12,000. What is the value of option? 40. And third you will take how many options? 12 only. So actually is also 12. 12,000 into 40. Got it? Simple. Can we do the solution? Yes sir. Any doubt? Write down calculation of. This working note is very important. Calculation of expense to be recognized. Year end. Then what do we write down? Working. Then what do we write down? Cumulative expense. And then what do we write down? Expense. So year end. First year end 31st March 2002. So working is what? 14,000 into 40 into what? This is the total value of option into 1 by 3. So 1 by 3. What is the cumulative expense? One lakh 86,667, and this will be only expense. Very good, excellent. Then we'll come to the second year 31st March 2003. How many options? 12,000 into what? 40 into what? 2 by 3. How much? 3,20,000 minus what? This minus curve. What is the answer? 1,33,333. Good. Last year 31st March 2004. How many options? Into what? Into what? How much? 4,80,000. What is the expense? 1 lakh, 1 lakh 20, 4 lakh 80 minus 3 lakh 1 lakh 60,000. Use calculator, Ray. One mistake, one attempt. Gone na. For this time, is calculation mistake should be avoided because we are using calculator. But what do you think? Chapter is complicate? Complicate? No, 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 complicate not. But what they have asked? Generalize entry. So can we generalize? You will do, I will do. So it is a books of which company? XYZ. I don't know the name. I have forgotten the name. X Limited, right? X Limited. Journal. First journal entry 31st March 2001. Read on employee compensation 2002. Account debit to what? Stock option outstanding account 1 lakh 86,667. Can you do the balance journal entry by your own? Do it. Done. अरे do रे नालायक वाह. Means what do you think? You will directly do in exam? Do a practice also required. Like I am also practicing with you. I am writing full employee compensation account debit to stock. I am practicing for next batch. You should practice for your exam. But I require less practice. You require more practice. एक बार just try. All the journal entry. This is practice, habit of writing. You also passing journal entry of transferring it to PL. That is deemed journal entry. Okay. Narration is required or not required? In exam required, in class homework. In exam required. In class you can ignore, but it is required in exam. If you are not writing narration, they may deduct marks. But small narration, being expense recognized, being transferred to PL, only this much. Don't write big narration. Being as per resolution dated, this. That we used to do in what? Our class 11, na? Starting. Our teacher used to say resolution dated. That time we were not knowing what is the meaning of resolution. Hana? What is resolution that time we were knowing. Then we came to foundation, we started act, companies act in inter. Then we understood अच्छा resolution means any decision taken in meeting. Correct ना? मजा तो आ रहा है. चलो. So can I say in this question you have done 3 journal entry for 3 years, but exercise day and vesting day are say if nothing is given, we'll assume all the vested options are exercised. All the vested options are exercised. Nothing is given, that assumption will take. So on 31st March 2004, we need to pass journal entry of exercise, compound journal entry, but the exercise price is 0. Means no cash is coming in. What journal entry will do? Stock option, outstanding account debit. How much? 4 lakh 80,000 na. To equity share capital. And they have given nominal value. To equity share capital 12,000 into 10 and 2 securities premium. The balancing figure how much? 3,60,000 being options exercised. You can end up being 12,000 options. चलेगा. Can we take one more question? Can we take one more question? Now only questions. Question number 2. And this question, let's see what they have given. ABC Limited grant 1000 employee stock option on 1/4/2000 at rupees 40. At rupees 40 means what? Exercise price. Means now exercise price is given in this question. So 1000 employee grant 1000 employee stock option means total option is 1000. When the market price is 160. The fair value of option calculated using option pricing model. Means there is one technique to find out fair value option. We are not supposed to calculate from examination point of view. They will always give fair value option. Already I have said they have given fair value option. This is what exam December 2021 5 marks. I said that recently they started asking question on fair value. Believe me, before 3-4 attempt I also don't used to teach fair value because there was no question in ICS study material. However, I used to teach, but suddenly they have asked in exam. Not fair. Not fair. Correct na? But chalo theek hai. But now you have understood. Understood na? Yes. The fair value option calculated using itna is 120 per option. Means now, can I say this 160 minus 40 is how much? Or it is also coming 120. Means even though you have taken, if in exam you would have taken intrinsic value, you would have done correct. But just try to understand, here fair value can be different than intrinsic value. And if both are different, you should take fair value option from examination point of view. Understand what I am saying? So even though suppose in that exam you have not understood fair value, you will take intrinsic value, your answer become correct. Your answer become correct na? Are you able to understand what I am saying? But chalo, now we are expecting that they may ask question on fair value, and I have given the concept of fair value. The vesting period is 2.5 year. 2.5 year, it can be 2.5 year. And the maximum exercise period is 1 year. So exercise period will start after vesting period, means after completion of vesting period. 300 unvested options lapse on 1/5/2002. So 300 lapse means withdrawn, cancelled. 300 unvested option. Unvested option means during vesting period. 600 options were exercised on 30th June 2003. 100 vested option lapse at the end of exercise period. 100 vested option lapse. Vested option lapse. I hope you are understanding the emotions of question. Emotions. Past journal entry giving suitable narration. They have written also. And even though you are not writing, they will deduct marks. I will say even though they don't mention, you should write narration, but small narration being khatam. Being dot 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 khatam. Correct. Can you do this question by your own? Let's see how many of you are doing absolutely correct. Question of how many marks? 5 marks. Answer is given, but you are not supposed to read the answer. I am giving you how many minutes? 5 minutes for calculation of expense. For calculation of expense, it can be done in less than 5 minutes. But first draw timeline. Now, have you done? Trying? Only one mistake you can do. Let's see whether you are doing that mistake or not. Only one mistake, because of that reason I have asked you to do. Because I always think that if you are doing mistake now, then you can rectify it. But suppose you are not doing that mistake, in exam you may do that mistake. You require more time or done? You are understanding or not? Not understanding na? Huh? From your face I can understand you are not understanding. You have understood previous question you understood? This question you have stuck? Whatever you will say true to me, okay? Don't hide anything, okay? Previous question you have understood? Concept you have understood? Last class, yesterday you came na? Huh. Okay. So let me draw first on your behalf, even though you have drawn. Can you help me? Can you help me? What is the grande? Help me. No, no. I said only she will help me. Help me. Ach- Acha, you have not drawn only. Because of that reason, you are not able to do. I said na first draw timeline. You have drawn. Acha, chalo ठीक है. Now, how many of you have drawn timeline? So can you help me? Help me. So grant day is 1 for 2000. First write down how many options granted. 1000. What is the market price? 160. What is the exercise price? What is the intrinsic value? What is the fair value? However, whenever fair value is given, this is not at all relevant. This can be different also. Therefore, I am going as per concepts. Okay? Whether they have given nominal value, nominal value, nominal value, face value. So we need to take assumption. We'll take assumption. You can assume 100, you can assume 10, also your choice. Correct. You can assume 100, 100 le lo. Assume, correct. Then 31st March 2001, 31st March 2002, and this is 31st March 2003. But vesting period is 2.5 year, 2.5 year, 30 September 2002, and vesting period is 1 year from this. That is 30 September 2003. This is exercise period. Understood? Clearly it should be drawn. It will help you. Then some options were cancelled on which date? 1st May 2002. So 1st May is somewhere यहाँ पर. So on 1st May 2002, how many options were cancelled? 300 options were cancelled. So out of 1300 options cancelled means how many options were vested? 700. Out of 700, how many exercised? And how many were cancelled? 100 were cancelled. Got it? This is the entire question. Entire question expressed in one timeline. Correct? Now we can do working note. So calculation of expense. Calculation of expense. So we write down 4 column. Year end. Working. Cumulative expense. And expense. Correct? The first year end 31st March 2001. But the how many options will take? 1000 only. 1000. Why? Because the cancellation part were not known at that date. Correct? So 1000 into what? 120 into what? 1 by 1 by 2.5. Anyone done 1 by 3? Ah, pakada gaya chor. I was saying the one mistake you can do, and this is the mistake. This mistake, why it happens? And there is high chances. I mean, right now you have done correctly. But same question in exam, there is a higher probability that you can do this mistake. Why? Because in exam, lot of pressure. For, matlab, in exam hall, so you are with pressure. And believe me, 40% student fail in exam not because they don't know the question, because they take extra pressure. 40% student will fail because of this reason. Understood? So I will always say, be calm in exam. If you will take extra pressure, nothing will help you. Be calm, have a smiling face. Even though worst questions come, enjoy it. मजा आ रहा है. Why? Because if it is worst for you, it will worst for everyone. Enjoy the question. Correct now. It's just like that you went to foreign countries. For the first time I went to the foreign countries. Believe me, I was 8 days. 8 days I have eaten nothing because taste was not coming. Their taste is but the Maha Bakwas taste. I always used to find where I will find Indian, matlab idli dosa. Correct na. So 8 days I was only developing my taste, but failed. So it happens when you do something, it will take some time. Okay. So 1000 into this, how much? How much? 48,000. 48,000. Then 31st March 2002. 1000 into 120 into what? How much? 96,000. And this will be 48,000. But last, the date will be what? Year end will be 31st March only. Because we recognize expense for that particular year. Expense will be recognized at year end, na? But for the 6 month, correct now. You can write also 30th June. For that, marks will not be deducted. If you want to write down better. 30th September, na? 2002. But you can see I have written year end. So 30th September is not year end. But for these marks will not be deducted. I am just explaining you that you are calculating expense for that particular year. Year means 12 month, na? Are you able to understand what I am saying? Chalo. But for this point, they will not deduct marks. Whatever you are writing. Whatever you are writing. So it will be 1000 minus. So it means 700 into 120 into 2.5 divided by 2.5. You have done into 3 divided by 2.5. How much? 84,000. Oh my god. No. 84,000. Now so you can see कि last year we have recognized an expense of 96,000, but on reassessment we found that 96,000 should be 84,000. So it means we should reduce expense. We should decrease our expense. So how much decrease? Huh? 94 minus 84, how much? 12,000. Now, good question. Correct. Now, coming to journal entry. First your journal entry done. EB expense to matlab employee compensation to stock option outstanding account. Second year also done. What will be journal entry for third year? First journal entry is what? Employee compensation to stock option outstanding account. How much? 48,000. 48,000. Correct. 31st March 2002. Employee compensation to stock option outstanding account. 48,000. 48,000. My question to you all, what journal entry on 30th June, 30th September, sorry, 2002. This is third year. Stock option outstanding account to what? Huh? Bolo. Just try to understand. It is not cancellation of vested options. It is reassessment of expense. Means it is actually changes in accounting estimate. I think you have not done AS5 till now. In AS5 we'll discuss about changes in accounting estimate. Whenever estimation change, for example, you know about provision for doubtful debt. What I am saying, you know about provision for doubtful debt. बचपन में you have done a provision for doubtful debt. That is also one type of estimation. Ki this much bad debt will happen. Now suppose you estimated that 10,000 will be your bad debt. But suppose actually your bad debt is 8,000. What you will do? Means this you have created from PL only. Your journal entry was PL account debit to provision for doubtful debt. अरे बोलना रे. This is journal entry for creation of provision na PL account. But actually your bad debt was only 8,000. So you need to reverse 2,000. So this reversal will be through general reserve or PL? PL only na. PL only na. So simply this is reduction of expense. Reduction of expense will be adjusted with PL, not with general reserve. PL and general reserve are two different accounts. Understood? So what journal entry you will do? It should be employee compensation only. Means you reduce employee compensation of current year, third year. Understood? You will reduce and it will be adjusted in PL only, not in general reserve. How much? 12,000. Have you understood this point? Then balance you can do. Batao. What is the exercise day? They have given the 600 options for exercise on which date? 2003. So how many options exercise? The bank account debit. 600 into what? What is the exercise price? 40. How much? 24,000. Then stock option outstanding account. 600 into what? 120. Very good. How much? 72,000. Have you understood what I am doing? Don't write till you understood. Huh? I am not in hurry. Understood? Now have you understood this question solution? Not understood? Chalo, okay. To equity share capital 600 into what? We have taken assumption 100. You can assume 10 also. Huh? For this assumption can be 10 also. That depends upon what assumption you are taking in exam hall. So we have assumed 100. It is 60,000. And 2 securities premium balancing figure. How much? 36,000. Understood? Correct. Now, vested options cancelled. What is the last day of exercise period? Achha, this was exercise day. Oh, no. You have given some wrong day. 600 options were exercised on 30th June. 30th June, na? It was 30th June 2003. And last day is 30th September 2003. What journal entry? Stock option outstanding account debit to what? General reserve. How many options? 100 options? 100 into what? 120. That is equal to 12,000. Narration is must. Huh? In class, we'll try to avoid narration. In exam, narration is must. Two beautiful questions we have done. But these two questions were easy as compared to my example, which we have done yesterday. That example was actually an example I have taken from final syllabus. Understood? Just try to understand. If I would have said initially now it is a final level question, you would have died. But believe me, batao, you have understood that question or not? You have understood or not? Correct. And I think these two questions were simple than that. Sometimes simple questions are more dangerous because less information, na. That is exactly the correct question. Here, I think information are what? Not given. All informations are not given. Sometimes it become more difficult. if you are not able to understand the information. Have you understood these two questions? Chalo. I hope done correctly. Once you see the answer, whether the answer is matching or not. You can see they have done employee stocks option to general reserve. This is not correct. This is actually not correct. This is not correct. It should be PL only. This should be PL. Correct? So this is from correction from my side. This is not correct. 100% wrong. 100% wrong. ICI solution can be also wrong. बोलना रे. And they have assumed 10 rupees. We have assumed 100 rupees. Nothing to worry. We write a note that we have assumed nominal value to be rupees 100. Write on that note. Assuming that we have assumed that nominal value is equal to rupees 100. Can we take one more question? Of course, we'll take. Okay. Question number 3. This is the most favorite question of institute. I think whenever they want to ask a question of 5 marks, they will give this only. I don't know why. Most favorite. Have been asked n number of time in exam. N number of time. Means in your exam also this question may be repeated. Let's see. A company has its share capital divided into shares of rupees 10 each. On 1st April 2001, it granted 10,000 employee stock option at rupees 40. 40 means when the market price was rupees 130. So 130 minus 40 means intrinsic value how much? 90. The fair value option calculated using option pricing model is 90 per option. What is this, right? Means what they are making sure that even though you don't know fair value, then also your answer will be correct. Understood? Correct. The options were to be exercised between 15th March to 31st March 2002. So this become exercise period. Means one thing is clear that 15th March 2002 is vesting day. The employee exercised their option for 9,500 shares only. Remaining option lapse means out of 10,500 options lapse. The company closes its books of account on 31st March every year. So journal entry. Why this question is good question from examination point of view? Because in this question, the vesting period plus exercise period is less than 1 year. You can see, let us draw the timeline first. Question number 3 we are doing. Batao. What is the grant day? 1st April 2001. How many options granted? Correct. What is the market price of shares? What is the exercise price? What is the intrinsic value? What is the fair value? तो intrinsic value कांटा लगा. What is nominal value? 10. It is given in the first sentence. Of rupees 10 each. Nominal value of shares. Correct. What is the exercise period starting from 15 March 2002 till what? 31st March 2002. So you can see this is 1 year. Correct. And one thing is clear that up to this is vesting period and this is exercise period. Correct. Now in this question directly it is given that during this period 9,500 shares were exercised and 500 shares were cancelled. Means one thing is clear that all the options were vested. All the options were vested. From this question we can understood now, because they are saying 9500 exercise and 500 cancelled, means all the options were vested. Correct? Understood this point. Now just try to understand, because this is a question of 1 year only, and in this year we know actual information. So whether estimation is required? No. When you know actual information, estimation is not required. So can you say we will recognize? Now the question is that should we recognize expense for 10,000 or expense for 9,500? 9,500 only. Only this is the point which you are supposed to understand. Have you understood this point? What I am saying? So directly we'll pass journal entry on 31st March 2002. 31st March 2002. Bank account debit directly. Directly we can do now. Are you able to understand what I am saying? There is no need to recognize the expense for 10,000 and then reverse. Because you know that out of 10,900, 9,500 shares were exercised during that year only. Correct? Means 9,500 into what? 40 exercise price. How much? 3 lakh 80. Correct. Then should we write down stock option outstanding account or employee compensation account? Now there is no need to accumulate the stock option outstanding account. Directly we can see is employee compensation account. Correct now? So employee compensation account debit 9,500 into what? 90. 8 lakh 8 lakh 50 55 55,000 to equity share capital. How much? 9,500 into what? 95,000. Balancing figure will be what? To securities premium. How much? 9,500 into 11 120. How much? 11 lakh 40,000. Simple. 5 marks question. Question cannot be easier than this. One more entry, PL account wala entry. But will you pass any journal entry for vested option cancelled? No. In this question there is no need to pass, because you have recognized expense only for 9,500. Student may do mistake only in this point. Understood what mistake they can do? Correct. So the second journal entry will be PL account debit to employee compensation account 8 lakh 55,000. Most favorite question. I don't think, but they will always ask this question only. Out of 10 times, 8 times this question is only asked. That on MRQ means must revise question before exam. MRQ means what? Must revise question before exam. I hope you have understood this question. Chalo. This also you have understood. Question number 4 will do not now. Question number 5. Ajanta grant 120 share option to each of his 460 employee. For the first time they have given employee, number of employee. In my example I have given number of employee. In ICA study material for the first question there is a number of employee. Huh? So 460 employee, and to each employee how many options? 120. Each grant is conditional on employee working for Ajanta over the next 3 years. Okay. Ajanta has estimated that fair value of each option is 12. Now they have given fair value option. You can see in this question they have not given market price. They have not given exercise price. Thank you very much. We don't want also. We want fair value of option. They have given fair value of option. Understood. Understood. Now suppose if I have not given the concept of fair value option, you will be confused in this question. Where is the market price? Where is the exercise price? You will be confused. It is fair value of option, not fair value of shares. Fair value of options and fair value of shares are two different value. So be careful. Sometime in exam question they may give fair value of shares also. But in this chapter for calculating expense we want fair value of option or fair value of shares. What is given fair value of? If suppose it is fair value of shares, then be careful. Huh? Fair value of shares is not required. What is required? Fair value of option. Option is different. Shares is different. Option means right. Option means my right. Correct? And the value of right is determined from the fair value of shares. Understood? This point have you understood? Yes, sir. So in this it is options only. Thank you very much. In one question it will come fair value of shares. I am giving warning to you all. When I will do that question, don't do mistake. Because that question will be done by you only. One second warning. For this chapter we want fair value of share or fair value of option. Fair value of options. Thank you very much. Ajanta estimate that 25% employee will leave during the 3-year period. During the 3-year period. Means first year, second year, third year. All 3 years. How many employee will leave? And so forfeit their right to share option. Everything turned out exactly as expected. Means actual and expectation were same. Means in my question actual and expectation were different. Yaad kar. I have given estimated then actual were different. In this question they are asking for making question simple. The actual and expected were same. Required calculate the amount to be recognized as an expense during vesting period. Don't see the solution, do by row. Have you understood the question? Even though you have not understood, do it. Do mistake. I from my point of view you can calculate correctly. But don't see the solution. Okay, I'm giving you how many minutes? 4 minutes. 1 minute for me, Ray. Done? I think simple. Let's see what you have done. Whether your answer is matching. Check karo. How many of you have done correct? How many have done calculation mistake? बताओ. So 460 into 120 how much? Means either you can do in this way what solution has done, or you can do in this way also. Ki 460 employee into what? How many employee will leave? 25%. Means how many employee will be expected to entitle the option. So into 75% you can do. Correct? Into what? The number of options per employee how much? 120. Then into what? Fair value of option how much? Fair value option 12. Into what? 1 by? Same answer will come. 1,65,600. So what mistake you have done? Any mistake? What you have done? 25%. Understood now? Chalo theek hai. In class if you are doing mistake, okay. But now because you have taken what? What you have taken? 100% you have taken na. Are bol na re. So just give circle and write down you have done pop. Write down pop. Write down. Not when you receive the book then you write down pop. Correct na? Now this mistake should not be repeated. What mistake you have done? Girls thinking same only. Chalo. You should also write down pop. Pop should not be repeated. What mistake you have done? You have done or not done? Chalo theek hai. Okay. For you, some relaxation will be there. Okay. Then I think if you have done first correct, second, third will be correct only. Correct? First wrong, so second, third will be also wrong. I think no doubt in this. And this will be same only because first, second, third year employee remain same. Number of employee remain same. I think super easy question, but then also there is a high chances if you are not reading the question carefully or if you misinterpret the information, then you can do wrong. But question cannot be easier than this. Now, whatever balanced questions are there that require some concept, so I will not take right now. All your question, all the question, whatever is given in test your knowledge, you can see after seventh question there is test your knowledge. There are some MCQs, however MCQs are not asked in exam. So MCQs will not be asked, but only for understanding the concept you can read MCQs. If any doubt you can ask me. Then they have given some theoretical question, you can read. If you understand, okay. If you do not understand, then also okay, because you will ask me na. Correct? But you will be able to understand. Correct? Then just read theoretical question, just go and read it. There is a very rare chances they will ask theoretical question also. From this chapter always practical question will be asked. Whatever theoretical question important from examination point of view, I will only give note. Don't worry. Okay, I know which question can be asked, which question cannot be asked. Then there are some practical question given for practice. This entire practical question will be your homework. This entire will be your homework. So already I have given the PDF to you. So for the time being you use that PDF. Next class I think you receive the book. Okay. This chapter 2 or 3 questions are left. That questions are of good quality. It will take time for understanding. Therefore I am not doing. Correct. So for today this much only. Okay. This chapter is over. Only questions, 3 questions, more question I will take. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining